If you missed an international information reporting requirement on your U.S. tax return, there's a minimum $10,000 penalty exposure that you're up against. I'm going to show you in this video how you can potentially avoid that. And specifically, what I'm going to show you, we're going to walk through the progression that I go through with my clients or people that come to me as to what different options they have to get themselves back into compliance and avoid the international penalties. You know, a lot of times what I like to do is tax planning, and that's really what got me into this business originally, was helping people become more efficient from a global tax perspective. But the reality is there's a lot of confusing forms that need to be filed for just normal everyday people that have international assets, international businesses. And some of these reporting requirements just get missed. People don't know the rules necessarily, or maybe sometimes the rules aren't that clear and you think you knew the rule, but the rule was actually something else and you needed to file a certain form. So it's very common for these forms to get missed, and I deal with a lot of people trying to get back into compliance. And fortunately, the IRS, although the penalty is steep at $10,000 on the minimum side when you miss these certain forms, they do have certain programs that are out there because they recognize that there are a group of people, a large contingent of people that would have unintentionally missed these filings. It's very rare in particular that these missed international form reportings are due to some willful or, intended tax evasion. A lot of times you just didn't know you had to file the form and the form didn't get filed. So that's what we're going to talk about today. And the specific forms we're talking about are if you have a foreign business, there's a foreign corporation, foreign partnership, foreign disregarded entity or branch. There's a specific form that has to be filed for each of those. For example, the Form 5471 is for foreign corporations, and that's like a mini corporate tax return that gets plugged into if you're an individual owner, plugged into your Form 1040 and attached to it as part of the filing. And there's a similar Form 8865 for foreign partnerships and 8858 for foreign branches. And the other big ones are foreign trusts. I'm not going to dig too much into foreign trusts because honestly, the Forms 3520 deserve their own special podcast for those because they're complicated and the IRS is particularly nasty when it comes to the foreign trusts. But the other main forms are the foreign financial asset, Form 8938. So that's your bank accounts, stock ownership, retirement accounts. And then the other one is your FBAR, which is very similar to the Form 8938, but it's filed separately from your tax return. It's foreign bank accounts, foreign pensions, and that sort of thing. So this video is not to tell you when you have that filing requirement. It's to tell you if you had that filing requirement and you missed it, what is your options? What are your options? So what I generally tell people is let's look at the IRS amnesty programs first to see if you qualify. And specifically the amnesty programs that exist, it's called the IRS Streamlined Filing Procedures. So these were introduced in 2012. Specifically, they introduced a foreign streamlined filing procedure. So this is people outside the U.S. This could be non-resident aliens or expats, U.S. people living outside the U.S. There's a specific requirement. Basically, you have to meet the foreign earned income exclusion test to qualify. So it's specifically for foreign people. And then in 2014, they introduced a domestic streamlined filing procedure for people in the U.S. who also miss these forms. And the whole idea is there's this large contingent of people around the world or in the U.S. that have international reporting requirements, and they just simply unintentionally missed filing it. So the IRS, instead of trying to catch these people with penalties, because you could think it could be very easy for somebody that had a foreign corporation and never knew they had to file a 5471. I mean, the penalty is $10,000 per year, so that racks up. So if 20 years go by, you think that person's going to pay a $200 penalty to start filing tax returns again? Probably not. He's probably just going to hope it all goes away. So the IRS said they put out these procedures so that people would actually come back into the tax system. That's the whole idea. But they don't want the people that were intentionally evading taxes to come back without a penalty. So that's what the foreign procedures do, is they get people back into compliance and you don't have to pay a penalty at all. If you missed foreign corporation filings and your FBAR, you have to file 3 years of delinquent tax returns, 6 years of delinquent FBARs, and that gets you back into compliance going forward. And there's actually no penalty you have to pay if you owed tax in those years. You don't even have to pay the failure to file and failure to pay penalty. You only have to pay interest and the tax related to that. So it's a pretty sweet deal overall. So in 2014, they did the same thing for domestic people, but I guess they thought, domestic people should have known a little bit better. So they applied a 5%, what they call miscellaneous offshore penalty if you live in the U.S., so U.S. resident. And the way that's calculated is you have to look at over the 6-year FBAR reporting period, you look at the year that had the highest balance of undisclosed foreign financial assets. So that can get a little tricky to calculate sometimes if you have businesses and different accounts, and maybe you filed an FBAR for 1 year but didn't include all of the accounts. So you do have to do a little bit of work to figure out how that penalty actually works out. But the general idea is, if you've never filed an FBAR and you had a foreign bank account, then you're going to look at those past 6 years, and whichever year had the highest balance, you tack on a 5% penalty to it, and you pay that as part of the streamlined filing procedures. Again, if you had tax, you have to pay the tax plus interest. You don't have to pay the failure to pay or filing penalty. You pay that 5% penalty. So I generally suggest that as a first option to my clients. And there's 2 qualifications that are important for that. Is that one, the IRS can't have already contacted you about the delinquencies, the foreign delinquencies. I mean, basically the IRS, you can't be under audit for not filing a Form 5471, and you say, okay, I want to do the streamlined procedures now. That doesn't work. You have to do it in advance. So there is a little bit of a time pressure in that sense that you really want to do it before the IRS finds out something out for you. And the other qualification is that it has to be a non-willful. Your missed filings have to be considered non-willful. And it's a pretty low bar, honestly. I mean, the basic idea is that you didn't know and you didn't have any reasonable reason to know that you had these foreign international filing requirements. And as soon as you found out that you did have that requirement, you took the necessary steps to get back into compliance. That's the non-willful argument in a nutshell. And obviously, you have to attach that to the actual filing on a Form 14654 or 14653, depending on if you're inside or outside the U.S., and you attach that statement, and you're going to want to embellish it, and you're going to want to tell your whole specific story about why you haven't filed and the specifics related to it. But that's the basic idea, and it's a pretty low bar. There's all kinds of examples of people that would not qualify. I mean, one of the ones I see a lot is somebody that say they filed in the past the Form 5471 or FBAR, and then they stopped filing it for a period of years, and then they want to come back into compliance. In that case, in my opinion, it's hard to make an argument that it's not willful because you have a clear history of filing the form, then you just stopped. So it's you just decided not to file anymore. That's almost definitionally willful. But again, you really have to look at the specific facts of each person. And this is where somebody that has experience with these filings is really necessary to talk you through what your best option is. But so that's my first option. And for my people in the US, that 5% penalty can be a hard pill to swallow, even if it does get you back into compliance and the rest of it sounds good. So your next option is what's called the DIIRSP. And the acronym stands for Delinquent International Information Submission, DIIRSP, Delinquent International Information Reporting Submission Procedures. And if you file under the DIIRSP, you don't have it doesn't require the same 3 years of tax returns, 6 years of FBARs. You really have to file all the delinquent years, whether that's on amended returns or original returns if you didn't file. And the idea is that you're not getting the same protection under the streamline, but you have the ability to request reasonable calls. And so, some people call this a quiet filing, and that you're not filing under a particular program. You're just amending the returns and requesting reasonable calls. Now, there's no penalty associated with this. If you owe tax, you're going to have to pay the tax You do have penalties on the tax payment, so late filing, late payment penalties if they apply. But as far as just the form itself, there's no automatic penalty necessarily on the international form delinquency and filing. But if you do get a penalty, and really what I do is file in advance a reasonable cause statement with the filing. So the reasonable cause statement, it's similar to the non-willful statement, but just think of it as a little higher bar. So the non-willful is what it sounds like, that you were not intentionally trying to evade taxes. With the reasonable cause statement, that's intent is not good enough. Like it's not good enough to just say you didn't intend to file taxes. You have to show that you took a reasonable approach to make sure that you were filing all your taxes correctly, and you failed to do so after taking those reasonable approaches. And it's very subjective whether the IRS determines that you have reasonable cause or not. One of the common ones is reliance on a tax preparer. That is, it can go either way with that. A lot of times I see that actually get denied, but it really just depends. I've seen it work as well. If you hire your cousin to do your tax return who has no experience with international taxpayers, then that's not really taking a reasonable approach to making sure your international filings are done correctly, because a reasonable person probably wouldn't have hired somebody without that experience. Whereas if you hire a firm that specializes in international tax work and you didn't file a specific international form because you relied on their advice, that's a little different. I mean, a reasonable person, if you're not a tax professional, should be able to rely on somebody that puts themselves out as an expert in that field. So the argument's different. It's going to be very specific case to case. But that's usually my second line of defense. It's streamline. And if you don't qualify for that, or maybe they don't want to stomach the 5% penalty, the next option is the DIIRSP, amend the returns, attach reasonable cause, and that's your battle from there. The other one is more specific, or is specific just to FBARs. So like I said before, the foreign bank account report is filed separately from your tax returns, totally separate filing. So it's possible that you missed your foreign bank account report, but there's nothing wrong with your tax return. Maybe those foreign bank accounts you had interest, and you picked up the interest as income. You didn't meet the threshold for an 8938 requirement. So there's nothing wrong with your tax return, but you forgot to file the FBARs. Well, in that case, there is a specific procedure for the FBAR delinquency filing. And it has the same basic idea as the streamline, in that there's a non-willful argument. If you weren't willfully evading taxes or willfully trying to hide something from the IRS, then you can file 6 years worth of FBARs and get back into compliance. Technically, it asks for a statement to be attached to the FBAR. I mean, what I do, because it all has to be filed electronically either through the BSA website, or if you have some other tax software that files it, you can't really attach things to the FBAR filing requirement. But if it's late, you can put a statement in there for other, and that's what we generally do, is put in a brief non-willful statement just to say that you qualify under these procedures for filing. And that's a really nice program, because the FBAR is a scary one. Because, if you have a foreign bank account that has $11,000 in it and you hadn't filed it for 20 years, there is technically a $200,000 penalty sitting out there for $11,000 worth of value, which is extremely egregious. And that kind of fight is going off in court every single year as to, the reasonableness of the penalty itself. But for now, that is the penalty, and that's what you're up against. So it's really not that complicated. File under the FBAR procedures, get back into compliance, and you're good going forward. That's the basic idea. Those are the 3 procedures that I like to put my clients through to try and avoid the overall penalties, if we can, on these international information procedures. As always, this is a specific area where you do want to get specific international advice from someone that has done this type of thing before. But just understanding the options that are out there is a great first step, and just know you're not necessarily dead in the water with the penalties that are out there.